Good day folks, it's Jim here from FX Charts. It's Monday the 25th of March. Right, we had some pretty awful EU manufacturing PMIs on Friday, with Germany in particular recording a bad result, which sent the euro sharply lower. German 10-year Bund yields went into negative territory, and with the Fed having taken a very dovish tone at last week's meeting, joining the ECB in this stance, US 10-year yields fell below 3-month yields, giving us an inverted curve for the first time since 2007, signalling the possibility of a recession. So sentiments currently turn very fragile, and risk assets are beginning to look very heavy indeed, while demand for safe haven assets such as the yen seem to be increasing, with the yen in particular being a beneficiary. So let's go and have a look at the chart. So there's plenty else going on as well, of course, with Brexit and the like. But in the meantime, this is a Euro 1 hour chart. Now, we had this sharp fall here. We've come to rest back at 61.8% of the whole recent squeeze higher. This was the ECB move. Now we've come back to meet this 61.8. We're sitting above it at the moment. And the hourly charts are, well, they're turning a little bit higher from an overbought perspective perhaps, but I do think the euro's a sell here. The 4 hourlies are pointing lower, although the dailies haven't yet shown us really anything at all. But I do think that if we are like to make some headway, as the 4 hourlies suggest, then we're going to head down here towards this 112 support area, and we're currently at 112.90, and maybe down here to this 111.10 area. This is going to be decent support down around here though. This previous low being about 111.80, 75.80. That'll provide decent support if we get there, but I do think we're probably likely to reach that and then head lower. The Aussie likewise, as a risk asset, that's a bit on the nose at the moment. As you can see, once again, the indicators, 4 hour indicators, are pointing lower. We're sitting on trend support at the moment. Let's just go look at the 1 hour chart. Sitting on this minor trend support at the moment, but I think it's probably a sell here, anywhere up to say the 200 hour moving average. So let's just say around 70.90. It's not too far from where we are now, and I doubt we're going much above 71 cents today. The hourlies look heavy, the 4 hourlies look heavy, but although once again, having said that, the dailies are fairly neutral at this point in time. This FIBO level here, I use this point down here because this was the interbank low recorded in the market, and this not really an accurate figure. So I'm using 67.15 as the low for the FIBO purposes. As I say, the dailies are not looking as though they're doing very much at the moment, but while risk sentiment does remain heavy, I prefer to be a seller. The big beneficiary is sterling. Is dollar yen, or sorry, the yen, I should say. Now the yen is broken down below this 23.6% move of the rally off these lows, and I suspect we're probably going to come back down. We're back down through 110, and it wouldn't be a surprise to me to see a move towards 109, possibly today. The 4 hourlies are pointing sharply lower. Once again though, the dailies haven't got a lot of momentum behind them, but they definitely do look heavy. So as with before, I prefer to sell dollar yen, and would look to do it sort of in the 110.20 area. I wouldn't necessarily go in now, but 110.20 wouldn't be a bad level. Sterling, I'd stay away from it. It's very choppy. We've got Brexit. If there's a no deal Brexit, there's all sorts of permutations about what could happen with Brexit. So I think I'd just stay away from it. The charts actually don't look too bad, but if we do get a no deal Brexit, I think sterling could really collapse, and that would probably take the euro to some distance with it too. So keep an eye on that one. Elsewhere, we haven't got a lot. The RBNZ meet this week. They're likely to be fairly dovish. The Kiwi's not doing an awful lot, but if the RBNZ are as dovish as their other central bank counterparts have been, then I think we probably head quite sharply lower. Looking elsewhere, This is a 4-hour chart of the S&P. As you can see, it's come back to sit on this rising support, but it has broken through these tops here, which provided some support for it. Now, if we break down through 2800, then I think we might quite easily go back and test this sort of level down here. That being around 2720. The dailies, as I said to you last week, we've been making higher highs, but this bearish divergence seems to be coming into play. So I think on the day I prefer to sell the S&P. If we get up to sort of 28 and a quarter, 28.30 or so, sell it there, and I suspect we might come back down here at some stage at sort of 27.50 to look at the 200-day moving average. So I prefer to be short there. Oil, if I just go and have a quick look at the oil chart. Now, I was reasonably bullish on that, but the lower growth outlook has impacted on the oil price, and it's now come back to, it's kind of broken this neckline as I thought it was, and it closed near its lows. The dailies do seem to be topping out, so I'd be square in oil now. I stopped myself out on Friday. I'm square at the moment, but I do suspect that we're possibly likely to test the downside now, with sort of 55, 57 probably in line for a revisit. We'll have to wait and see on that one. At the moment I'm square though, probably looking to sell rallies with a tight stop loss just above the high here, which was at 60 and a quarter. We'll leave it there for today. There's an awful lot going on. We've got plenty happening during the week as well. There's a lot of Fed speakers this week, and ECB speakers come to that. And if they continue with their dovish tone, that's not going to do yields any good, and is likely to have an impact there. The US dollar, you've got to be fairly selective about buying it though. If they are dovish, dollar yen will go down. Euro will probably go down too if the ECB speakers are dovish. Euro yen is probably not a bad play. I prefer to stay away from the crosses at the moment. It's hard enough to just trade the euro. So we've obviously got Brexit fears ongoing. Elsewhere, we've got the RBNZ meeting on Wednesday. We've got the Q4 GDP and personal consumption data later in the week as well. So they're going to be very important as far as direction. But until then, as I say, I prefer to sell the euro, sell the Aussie, sell stocks on rallies, and yeah, that's about it. I think that's enough to keep us going for the moment. So we'll talk to you tomorrow. Cheers.